threats from the Houthis and some mixed messages from the Iranians. And the fear is that once Israel commences its ground operation in Gaza, either preemptively or subsequently, this will lead to some sort of missile attacks, either from the Houthis or the Hezbollah or Iran, which would then obviously lead to some sort of retaliation from Israel. And then you've got a full-blown regional war underway. The US has moved some carriers into the region explicitly to prevent, it indicates that. And you also have, Blinken having completed his little whistle-stop tour, and now Biden coming out to the region. So these are all indicators that we're at a very sensitive point. And if we were to undergo a regional war, then obviously, you mentioned that we're in a geopolitical crisis. It would be nothing compared to what would happen if we had a full-blown regional war involving countries that have hundreds of thousands of missiles and warheads and top fighter jets. And so that's the question on everybody's mind. And I guess the initial answer will come once the ground operations commence sometime in the next few days. We don't know yet. Once they start, everybody will be keen to see what the response is from Hezbollah, Houthis, and Iran, and then we'll get that answers your question about the pause in Brent prices. I think that's probably what they're looking to see.
Sarah Akbar, Chairperson and CEO, OilServe Kuwait, and Non-Executive Director at Petrofac. Sarah, thank you for joining us. It's been a while. It's nice to have you back. And I wanted to get your thoughts. I mean, obviously, the picture Omar paints there about the unknown and the potential, to something very, very bad. And at the same token, you have lived through some fairly hectic moments in Kuwait and in the Gulf, all of us over the years, and yet oil continues to flow. The market continues to be supplied. Your thoughts on the context of that? I mean, it's looking somewhat through the narrow lens of the oil industry and oil flow from the region during major geopolitical crisis. That flow continues.
Good morning, Sean. It looks like you've grown a beard. I've not seen you for a while.
أنا مواطن.
مواطن. So yes, this is turbulent time, but I've been in this industry for 40 years. Turbulent times are the best times for the industry when they can really make money, because the oil prices, the fear factor factors into the price, and then you have those high prices during those tough times. And let me say one thing: as far as the flow is concerned, it's always that the industry tries to maintain flow during all times. It's part of their commitment that they supply energy to the world systematically, consistently, and at all times. So every single country, every single producer, every single company will continue to do so. So I don't see that there is a real issue of flows stopping because of this crisis in Gaza and the conflict. This is a very big conflict. I think it's a turning point for everything in the region, and I hope that it does not expand beyond what is happening in Gaza. Now,
just to pick up on that point, you think it is a turning point for the region? In what sense?
Yes, absolutely, because Israel and the region were thinking we are going into a peace process, reconciliation with everyone. They talks with Saudi, and I think that's gone now. There is no way on the planet anyone can sign with Israel after they see what they can do and the atrocities they are conducting in Gaza today, in front of everybody's eyes. That cannot just pass by. I mean, if it will throw everything, I think a decade probably, if not more. Anyhow, I think it is a turning point under all circumstances. It is a turning point because of the massive atrocities on both, you can see it on TVs every day, and the support that the West is giving to this case, while I think all the East standing by the Palestinian and the Palestinian rights. So it's just a wake up call that look, there are Palestinians here and they have rights, and we should not forget them in all our settlements that we are conducting with Israel. We'd like to have peace in the region, but it should not be. It has to be a very fair peace for all, and that's the reminder. So anyhow, I think it is a turning point. It's a changing in the change in the game, and things will not be as smooth as we expected. You know, the Abraham Accord and all. And I don't think it can continue to be. I mean, at least on the people's level, government level, they have different agendas, but
Well, we could see, I suppose,
unanimously on
we've seen Egypt has had a peace agreement with Israel for 40 years now, or something close to that, and yet it remains a kind of a cold peace. There's not a lot of real peaceful dividend, if you like. But let's go sort of back to basics. Noor Aslin Ahmed, editor, Crude Oil Argus Media in Singapore. Noor, I wanted to get your views on where we're at with the basic principles of supply and demand. Inevitably, we've seen that geopolitical risk rush back into the oil markets in the last week or two, and still wondering how big a risk it was. We saw an even bigger one, obviously, when Russia invaded Ukraine last year. We popped up way above 130. On this occasion, it's rather tepid in comparison. But where are we on the fundamentals of demand? We keep seeing the headlines that China is in a weak economic window, and yet imports of major commodities continue to remain quite resilient in through September in China. Where is Asian demand as we move deeper into the fourth quarter?
Well, okay, just to go into the supply, in terms of our fundamentals, I guess the one thing that you brought up is that the oil prices are not shooting higher at the moment. And I think it does show that at least the market is taking a pause. And I think that at this point, the key factor is what the oil market is looking at is that there will be no reduction or halt in Iranian exports should the US increase sanctions or add new sanctions. I think that's what the market is looking at. And I guess at this point, the market is still sort of like confident that there will be no major disruption in supply. Now, we look at demand, yes. I think that's also another factor why we're not seeing oil prices shooting up to 130, 150 right now. There's still a lot of uncertainty about demand, but also it's a bit of a bearish sentiment in China. I mean, recently you saw that the IMF actually is revised up its US growth forecast, but it expects China and Eurozone to grow at a slower pace than it did 3 months ago. So I think that the forecast is that China growth will drop to 4.2% next year from a projected 5% this year. So there is that the bearish sentiment that people are still very concerned about the demand in China. And we're not seeing a huge growth yet in China. It can, but we're not seeing it just yet, especially for the oil and.
So are we still seeing a good amount of inventory build in China then, with imports remaining above 11 million barrels a day in September? That must be ending up quite a significant amount still into inventories.
Yeah, I think that the inventories are building. What we're concerned about is that at this point, we are expecting that the China crude runs, the refinery runs, may still likely could be still quite high going in October. But if the domestic demand really doesn't pick up, it's possible that they could continue to export more products. And they're already talking about trying to export more diesel, despite the fact that they are sort of like, they're not going to get a new batch of products export quotas. But still, there is still a substantial amount of products export. So I think that the crude imports will still be sustainable, but the higher domestic crude runs could translate into products export from China unless the demand really picks up.
Omar, just coming back to the earlier point, and obviously Sarah touched on it as well, that the sort of advancements that we've seen in regional negotiations over the last few years, but even over the last few months, rapprochement between Saudi and Iran, obviously the bigger deals done with the Abraham Accords a few years ago, but generally the region sort of sorting out its own problems, the rehabilitation of Syria. Is all of that now disrupted, or can we see parts of it still moving ahead? Can we keep a détente between Riyadh and Tehran while maybe not advancing as quickly as seemed to be the case between Tel Aviv and Riyadh? Or are all these ships stopped, or can some of them keep going under these circumstances, even if things don't get dramatically worse, but ultimately as you see things at the moment?
Well, first of all, I disagree somewhat with Sarah regarding the likelihood of further peace treaties with Israel. I think they're decreased likely, but I don't think they're ruled out, whether that's Saudi Arabia or other countries in the region. One of the key reasons for that is, this risk of a regional war. Countries are very fearful, and the heads of state and the ministries of foreign affairs will be taking decisions based on what they deem to be the primary security threats they're facing. So while I think that in the next few months it's extremely unlikely that there'll be a Saudi-Israeli peace deal, you have to remember that some of the major barriers, or perhaps the major barrier to the deal prior to the current state of affairs, was something that was in the US's hands, which is providing the Saudi Arabians with a security guarantee, and then also the idea of a peaceful nuclear program. And both of those things can, to a significant extent, be resolved by the US. And Biden is in a very weak position politically, domestically, and actually on the foreign plane. So it's not beyond the realms of possibility that between now and November 2024, when the elections, US presidential elections happen, Biden, in an attempt to extricate himself from a pretty difficult political situation, goes for the Hail Mary and tries to secure a deal and uses all the levers he has at his disposal. And then more generally, I think the Israeli-Iranian, rapprochement is, on track. I think Mohammed bin Salman had a phone call with President.
The Saudi-Iranian rapprochement, yeah.
Saudi-Iranian rapprochement. They had Raisi had a call with Mohammed bin Salman, I think, a few days ago. And there's been no sort of, no indication of any hostility between the two sides. I actually think that, while in terms of the long term, I don't think the region will have peace unless there's a two-state solution, a sustainable two-state solution. But until that happens, I can foresee, lots of mini alliances. And unfortunately, the analogy, the not so good, or not so positive analogy is Europe, on the lead up to World War I, where there was all sorts of alliances, and some secret, some not so secret, and shifting lines and so on and so forth. And then we saw how that ended. Hopefully this one will end in the same way. But being fearful and being on the precipice of war is absolutely not a barrier to continuing attempts by various actors in the region to, improve bilateral relations.
Sarah, in terms of, sort of business as usual, obviously this moment in time finds the region, including Kuwait, significantly looking at adding its capacity or reaching new production capacity levels. How are they looking? Are they on track? Is the supply chain adequately available and to deliver on the targets that have been set by the NOCs in the region?
Yeah, so Sean, in this industry, we go through cycles, we go through, turbulent times smoothly, because our plans are normally long-term. They are never just short-term plans. So to execute a project, in this industry takes at least from 5 to 7 years. So everything that is happening today has been planned 5-7 years ago. And that's why we'll just continue to evolve and to be implemented as the long-term plans that were set. So you will not see immediate change in any of these plans to enhance production, not in Kuwait, not in Saudi, none on the GCC or Iraq, or, for example, Libya or any of these countries. So they will continue to
even if the
execute the
supply
plans.
chain costs become much greater. I mean, there is a lot of inflation now in the cost, operational cost of expanding production capacity. We're seeing that.
Yeah, but it's already set, Sean. It's already in plans. It's already been executed. Many of these contracts already been signed.
Okay.
And having this inflation within the cost of these projects. So I don't see any change in the plans. They will just go ahead and do them. Like I said, we go through cycles and we go through turbulent times, but we plan for it as well within the assumptions of each of the projects. You have risks and you have risk mitigation measures. So they will come in action now. That's all. But it's a very structured mechanism in planning.
And given the sort of obviously the as you say, we're executing contracts signed years ago and so forth. What about looking forward for the new capacity? We're just at ADIPEC. It seems a long time ago now, but it was only about a week or so ago, and the ADIPEC was absolutely jammed. It seemed like every part of the supply chain from all over the world was present, seeking out opportunities that the future must remain very, very bright in this region. Lots of opportunities.
Well, 160,000 people showed in ADIPEC, and which is one of the largest conferences in the world. And, the messages were very clear. We do need to invest in the industry. We need to continue to invest, and we need to raise the investments as well, because we have to cater for the new demand, and we have to maintain investment around, we need around $480-500 billion every year to invest in the industry in order to maintain production and, meet demand. And in the same time, the best message from this conference was, look, yes, we do need to invest in the oil and gas, but we do need to invest in emission control. We do need to invest in the transition in parallel. So that's why this is the only way for the world to go forward. And this was the biggest message coming from this conference, that, look, oil is not going away. It has to continue to produce. The world still needs it. But in parallel, we do need to do our homework, and we do need to reduce emissions. We need to do carbon capture. We need to enhance hydrogen. We need to work on clean fuels. So we need to work on all those things. Yes, of course. This was the best message, actually.
Yeah. Noor Aslan, I wanted just to look again into Asia. We see today reports out that Singapore's exports fell in September, which was the 12th straight month in a row. We're seeing Singapore's exports fall. And I'm wondering, what does that tell us about regional Asian economic outlook? We talked a bit about China, clearly in a slightly weaker place than it has been, not quite coming out of the COVID years with strong economic performance. But it would appear across the region, if Singapore's exports are so low, what does that tell us about the economic outlook for the region as a whole, and with it energy demand now as we go into sort of trading, January contracts and delivery on oil?
Well, I look a lot more at just the oil sector. So, but I think that overall, apart from China, I think that the Asian economies are still quite robust. I mean, I think it's still going pretty strong, and I think so. The consuming countries are still quite firm. So I don't think that there is still the issue. I don't think there's an issue in demand in Asia in terms of the energy. And I think the one thing that a lot of the consuming countries have had to do is increase reliance on, I guess, Middle East supplies following the Russia-Ukraine conflict. So you do see Japan, South Korea, even Singapore have had to actually shift a little bit more and buying a bit more of Middle East crude, a little bit more of US crude to fill up that supply gap that they used to get from Russia. So I think that's one thing that has shifted a bit.
And what about the rest of those that are availing of the Russian crude? Does that continue to grow in India and China and such places?
Yes. I mean, India's imports of Russian crude has been very hefty. I'd say that I think in the first 6 months or first 7 months of this year, Russian crude, which includes Caspian CPC blend, made up like almost 40% of India's total crude imports. And this compares to what before the Russia-Ukraine conflict, when it was less than 10%. So we don't see that that's going to come down because I think it's still the most economic crude for Indian refiners, and it's the same with China. So I think that China will continue to buy Russian crude as long as the price of Russian crude is still lower than other crudes, other suppliers that they get. So we don't see a big change in that in terms of the next 6 months to a year.
Let's go to the survey question and get a view on this wider geopolitical risk. Will escalation in regional geopolitical tensions drive Brent up to $100 in coming weeks and months? As we sort of started our conversation this morning, there is a sense of pause. But will this, are we on the pathway to there? I mean, we were on a pathway earlier in Q3 when we saw the big rally through Q3 from low 70s to mid 90s and then a drop back. And so the soaring to 100 has got supply constraint. Now it's got geopolitics. Is that going to be enough to do that? Omar, what we also have at the moment with this is due to the Saudi Arabia's restriction on supply, their economic performance has declined. Their production has they've reduced their production. As a result, their GDP economic growth for the year looks to be somewhat sluggish. Your thoughts on the outlook for Saudi being able to sustain that, given their economic aspirations?
Well, first of all, when it comes to Saudi GDP, when you're actually measuring activity that's on the ground in Saudi Arabia, what matters is not the amount of income coming in from oil. What matters is how much the government is spending on projects. So even if there's a decrease in oil production of 10, 20%, and that decreases GDP, oil production really only matters to economic activity in Saudi Arabia insofar as it influences government spending. And the reality is that if you look at the way the government is spending and the amount of debt it's issuing, it's still continuing full steam ahead and very aggressively. So I wouldn't be particularly concerned from a Saudi perspective with the headline GDP figures. What matters for them, and their thinking is very much medium to long term, not sort of 1 or 2 years, is do we have the liquidity we need to implement the projects we are seeking to implement? And then secondly, are those projects proceeding in the way we want? It's too early to answer the second question because, some of these super projects or giga projects, as they're called, like NEOM, are still yet to be unveiled. Tourism is certainly going well, but it's still, as I say, the jury's out on all of these things. However, they definitely are very committed to all of these projects, and I don't think there's any evidence of liquidity problems in any of them for the time being. We also can't discount the fact that part of the decision to cut output is strategic in the sense of in terms of its effect on the oil price. So if the counterfactual was that they produce more, we have to take into account the fact that the price would be lower, which would create knock-on effects, not just on the economic front, but as we're used to discussing on GI, on the geopolitical front too. So I think bottom line, I wouldn't read into it. Saudi Arabia's government is full steam ahead on all its projects. And as a citizen of the region, I think we're all just excited to see how these projects pan out in the coming years. And
indeed, they announced another major development project in the Asir region just this morning. Sarah, your thoughts on everything now from a markets point of view is sort of turning to 24 because, of course, we're all contracts. The oil markets are trading December contracts in first quarter delivery at this stage. Where do you think we go with the Saudi voluntary cuts? They've been committed to the end of the year, which is, now 2 months away. Would you expect that to roll into 2024 and to become a sort of somewhat semi-permanent feature of this market structure?
Well, I really don't know where they are going with this, but what it looks like that they will be rolling this into something next year because they don't see the reason why they should bring it into the market. This price actually is very suitable for all these countries. So why would they go and change anything as long as it is at this level? Now, the story will change if the prices in the winter, because of the higher demand, was above the $100, then I'm sure they will reconsider this voluntary cut. But for now, they just keep going by the ear, at least the way it looks now. They are evaluating the market every time, and they see if there is a real need to add this into the market, they will. But at these levels, it's doubtful.
And there's reports now as well that the Iraq production that has been suspended, the exports out of the Kurdish region may finally have found agreement with Turkey to restart, which would add 400,000 barrels of capacity there. So there doesn't seem to, there's enough supply out there for at the moment. I suppose a lot depends on, does Iran continue to enjoy the year it has had in terms of not getting sucked into the geopolitical crisis and maybe not exporting as much as it has been? But there's sufficient supply out there at the moment.
Correct. And now I think even Venezuela say they are loosening the sanctions so they can produce more. The Guyana production is coming online, so there is some even out of OPEC. There is some additional production. That's why it doesn't look feasible for Saudi and to come back and put that 1 million on the market.
Yeah, there's certainly a lot of supply expected in Latin America in the coming year, and we've seen the U.S. production recover quite significantly. Let's go to the survey result and give Noor Aslan the last word. Escalation, yes, there's a sort of a bullish nature in the room that the geopolitics are underway, and of course the economics are still solid. Looking into the new year, Noor, the outlook for the supply demand balance, we had going into the fourth quarter such a contrast between the OPEC forecast of a 3 million barrel a day supply deficit, that demand would exceed supply by 3 million barrels a day in the fourth quarter. The IEA a little bit half of that number. Where do you think we end up with this fourth quarter in terms of supply deficit, if any at all?
I think we are expecting that, because Saudi Arabia has extended its upward cuts until the end of the year, we do see that there's going to be a deficit. I don't have an actual number of it, but I think that has been the big factor. The Iraq coming back, the Kirkuk crude coming back has helped, because I think initially the market was not expecting the 470 KBD supplies to come back this year, because it was dependent on agreement with the KRG. And it looks as if, as you say, if that's agreement's done. So we do still see a deficit, but I don't have an actual number. But I think that the production cuts, the voluntary production cuts by Saudi Arabia has been a big factor that has actually tightened the market in the second half of the year. So we will probably end in a deficit. And I think that in terms of the oil prices, right now, if there is escalation and if supplies are affected, I think it's really anybody's guess where the prices are going to go. It could very well be very much higher than $100, but it really is depending on how whether the conflict actually escalates beyond Hamas and Israel.
Yes. Well, at the moment, it looks like the oil markets are relatively calm, trading just below $90 on Brent. No real overreaction there. It seems in a relatively sweet spot, really, given everything that's going on, all the context, the backdrop. Oil prices are more or less where they have been for some time now, really, when they've been moving between $85 and $95 a barrel. we'll have to wait and see if there's going to be new direction. I'd like to thank everybody. Thank you, Sarah Akbar, so much to joining us this morning. Omar El Ubaidli in Bahrain and Nur Aslan Ahmed in Singapore. Great to have all your insights this morning. Take care. We'll catch up with you all very soon. All the best. Thank you.